Good morning. This is Philip Strebel, Senior Market Strategist at MF Global with your daily metals commentary here for Wednesday, October 26th. First things first, I'm going to be out of the office on Thursday and Friday. Bill Baruch is going to be filling in for me for the metals commentary. So, a great guy. Trust him with taking over the reins on this thing for 2 days. Looking at metals here, real supportive last night, got up in the 1720s. What's key is that we need this second day close on this breakout. If we get that, we're probably going to continue higher and go up to the 50-day moving average, which is about 1738. If we do close lower on the day and below 1700, I almost think that it might fail and pull back to like 1675 down to like 1650 being the worst. That's going to be your psychological support. 1660 is the 100-day moving average, so that also might act as a mild support. So watch today's close. The close is key. If we do get a nice rally up, consider short-dated put options for protection on the gold market. Otherwise, silver looks good. Same exact thing as gold. If we get a 2-day extension upwards, we're probably going to continue to move forward. The only issue is that the silver options are really expensive, puts and calls. So if you look at calls, you probably got to do a call spread like 38 half, 40. Go to March, that way you get yourself through December. And then also you can look at something like 36, 37 and a half. But those are slightly expensive. Again, I had sent out several different emails with recommendations as far as the breakdown of the bids and offers and also the risk to reward ratios and then how to construct the trade. So if you didn't get that, just give me a buzz. Also, I did a euro currency write-up. I sent that out to a lot of people. It's a euro currency put butterfly. I think that the euro currency is kind of the key and the glue to holding this whole market together. We saw a massive shift into gold and silver for safety plays yesterday. If euro starts to come back or things start to get a little bit better or improve over there, you might see gold and silver come off. But otherwise, I would play more defensive on the euro, being long gold, short euro, being long gold, short S&P. Right now, for some guys that are long the gold market heavy, I'm looking at S&P put options. We priced up like the March 12 and a quarters. There's 152 days till expiration. That costs you about $29 per day for insurance, and it covers you on one S&P future. If you do the December ones, there's only 51 days, and it costs $46 a day, plus you're going to get the rapid time decay. So if you didn't know, I run the Strictly Options hotline for MF Global, so I'm pretty well versed on the options and I'm constantly scouring different strategies in there. The copper market, slightly confusing here. We're up at 350, which is up 8.5. I think that it might be getting a little bit of ahead itself, so we might punt to the short side with a small stop later on today. There are some key levels of resistance, and I think 350 on the copper is slightly expensive given the global environment. Platinum and palladium I still think look good. You had some improvements in the automotive sector, and you've had improvements on the labor within the automotive sector as well, and that's the main driver. And I think that Japan is just getting more and more wrapped up on what they're looking at putting out for production. So if you have any questions, again, futures option trading, don't hesitate to call. Give me a call, 800-803-8037. Again, I'll be out of the office tomorrow. The next day, Bill will be filling in for you, for me. And then, again, remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck, good trading.